All right, ladies and gentlemen, welcome back to our end of the market update for March the 31st of 2021. As a reminder, tomorrow is our last trading day of the week. Since Friday is a federal holiday, the markets will be closed. If you have any options, positions open, they'll expire tomorrow, just as an FYI, in case you guys forget. So, what happened today? We ended up moving higher than anticipated. All right, we were coming into today from our videos last night. We were expecting that we will see a brief pullback into the wave C, all right, to complete wave 2. We didn't get that today. The market actually ran up higher, with the Nasdaq leading 1.5% into the upside. The S&P was just shy of 0.5%. So what does this all mean for us? Before I dive into that, let's take a look at what has been going on. So from the 25th of March lows, we went up in 1, down in 2, up in 3, down in 4. We then printed 5 waves to complete minor degree wave 1. This whole correction, we were looking for a 3-wave move, right? So we printed down in A, up in B, down in C, for a clear spot on 50% retracement of the overall wave 1 advance. So zooming into this area here, okay, we'll note that we also printed 5 waves. All right, so this is actually a change in trend, but let me explain. So up in 1, down in 2, up in 3, down in 4 to finish wave 5. Now coming into yesterday, all right, if I show you guys this real quick, we're looking at this as an A wave. We printed this B wave, and we were now looking for the C wave down into the let me turn on these levels, into what could be the 38 to the 50%, right, extension or retracement of this overall wave 1 advance. Now I'm going to put this wave B here, and I am going to let you guys know why I still anticipate a little bit further downside. So if I take a retracement tool or an extension tool, all right, from the highs to the low of wave A, and I turn on the external 1272 fib extension, fib retracement, all right, you'll notice that that's where we topped today. Now, in looking at this wave structure, I don't see a change in trend. And what I mean by that, I don't see the start of at least 5 waves, right? We can't call this up in 1, down in 2, because there are no 5 waves for that first wave subdivision. So in order for us to investigate that, let me take you guys down to the 15-minute time frame. Okay, so in looking at the 15-minute time frame, you'll notice that there is no way we can count this as wave 1, down in 2, to then start going up in wave 3. There's no 5 waves here. Even if I take you guys down to the 5-minute time frame, it's just not there. So what we're calling this is that this was the start of wave A, down in B, right? 1, 2, and 3. And now we printed 5 waves to finish wave B. So again, let me label this for you guys. So up in A, down in B, and we completed wave C of this wave B correction. Now, what does this mean? This means that let me just explain something to you guys. If you guys have read or are familiar with the book, The Elliott Wave Principle, right, by AJ Frost and Robert Prechter, I do highly recommend this for you guys to skim through this book, and I'll post a link to you guys in the Discord group. This book really does show you guys the information that is required for understanding Elliott Wave Principle. And of course, there's a lot of other books and a lot of other literature that is recommendable. But to start off, this is it. On page 45 of that book, right, it's pretty small, not a lot. I took a snipping tool, little excerpt of it. So wave B, what does it say? Wave Bs are phonies. That was what they were designed. This is their observation. So they are sucker plays, bull traps, speculators, paradise. Okay. So they often involve a focus of a narrow list of stocks, or often unconfirmed. Okay, what does this all mean? This means that wave B are normally designed to trap bulls, right? So when you see something like what we saw today, right, you would think that this is the start of a new trend. So what's actually happening is that wave B is forming, and the FOMO, or the hysteria of people trying to get in thinking that this is a change in trend, is actually going to trap them. And then what's going to end up happening is that we're going to, you know, sell off into the wave C, and people are going to start panicking and sell. When they find themselves that there is a change in trend, they won't have enough capital to get on another trade. So what does that mean for us? Well, if you're in a Discord group, we didn't open any trades. I wanted to today. The idea was that if we saw another decline rather than this advance, then I was going to anticipate that we were going to bottom somewhere in the vicinity of the 38 to the 50% retracement of this wave one, at which point we would have monitored the volume and what was printing in terms of wave structure to anticipate a move higher into the overall wave three advance. Now, this is not actually too bad of a news. So where could this wave C now bottom at? Okay, you may be wondering, and I'm going to find out right now with you guys. So if we take an extension to a retracement tool to the wave one, obviously these are the levels that are most common for a wave two support. We will anticipate a level or a bounce of the 23.6 to the 50% retracement of this overall wave one advance. So we may get it tomorrow, we may not, but that's what I am anticipating. A back test of either our previous support at 39.50 or the back test of the previous fourth wave, which is up in 1, down in 2, 3, and 4, which coincidentally falls right smack at the 50% retracement. Okay, so that's another tip. Wave 4. Usually, when you have a correction, look for a support in the previous wave 4 to give you a good guidance of where that could bottom potentially. So, you know, it was tricky today, and luckily we didn't open any new trades because I do anticipate a little bit more of a downside to the wave C. I just don't see, you know, the form. I don't see 5 waves here, and so that's why. And I also noting that the 127.2 the 127.2 retracement or external fib level was noted there, and it acted as resistance. So that's my thoughts for the S&P. Now going over to the Nasdaq. The Nasdaq was a little bit on the bullish side today, and coming into yesterday we were anticipating further downside. Remember, guys, so we were calling this as a possible complex correction, right? We're calling this as a down in W, up in X, and we were looking for another pullback into the wave Y. All right, so we were here, we were calling this. But this is why Elliott wave is pretty good, right? And this is why using this methodology, you have to try to get an alternate count. So yesterday, we also noted that we're looking for wave 1. If this was going to be a change in trend, right, and coming into today, we were calling this as wave 1, wave 2, 3, and then we're going to go in 4. And guess what? You know, let me change this as to get a little bit more clarity. We hit a spot on 100% extension, right, of the wave 1 extended to the wave 2, and that was exactly spot on the 13,171 price level, which is resistance. It's a zone of resistance that we've been watching, right? It was resistance here, and there was resistance and support in this area. So that gave me confirmation that we could potentially see a little bit of a further downside, not too much, a pullback into the wave 4. Now, this wave count will be invalid if we break over the vicinity, or sorry, over the extreme of wave 1, which falls at the $13,000 region on the Nasdaq. If anything, if price falls below it, then we'll have to reevaluate this wave count and potentially fall back to the alternate, which was the complex correction, and we're going to see further downside. So it's not to panic. This is why we stay patient. So if you're in the Discord group, you'll know that that's what we exercise and that's what we do. Although we did take our trades in AMD, they start moving into the profits. So that was good there, as the SMH, which is the semiconductors ETF, was moving positively in the positive territory. So with that being said, I do have the link to our Discord group down in the description, which is free for you guys to join. Just click on the link and sign up, and that'll get you over to our group. We look forward to seeing new faces, and happy to work with everybody here. Again, it's totally free. Just come on in and just enjoy it. All right, guys. So with that being said, keep you guys updated in the group as to how the futures market will be playing out tonight, and keep your eyes out for those levels mentioned. All right. As always, I do appreciate you guys subscribing and hitting that thumbs up. That'll help the channel out. Thank you so much, and I shall see you tomorrow night. Take care. Bye.